Well, ladies and gentlemen, Tesla has just wrapped up their Investor Day 2023 presentation. I've just finished cleaning up the mess, and now it's time to go through some of the highlights. And boy, oh boy, are there a lot. I'll try to make this quick, but as Yoda says, do or do not, there is no try. While many in the Tesla community are no doubt sinking drinks and engaging in a lot of debauchery, here I am drinking my Athletic Greens AG1 and running through these highlights. Someone's got to do it. P.S. Excuse the typos in advance. There's going to be loads, and FYI, every quote in here is probably not going to be verbatim, just what I recall hearing. First of all, some opening remarks from Zach, pointing out that this presentation is all about the future, not next quarter. Sorry, Wall Street. Zach asking, what does it take to convert Earth to sustainable energy generation and use? And what role does Tesla play? What does it all mean for the company? So, regarding Master Plan Part 3, Elon and Drew had some comments. First of all, underscoring that there is a clear path to sustainable energy, converting the entire planet Earth to sustainable energy. With abundance, no austerity necessary, no sacrifices. This isn't making do. This is a win-win. Tesla will be publishing a white paper on how this will be achieved very soon. The current energy economy, approximately 80%, in fact a little over 80% of all global energy today comes from fossil fuel-based sources, yet only about 1/3 of that delivers useful work or heat. There's a lot of waste in the process. Gasoline, for example, converts about 1/3 of the energy into motion. When you factor in the extraction and refinement process as well, it's actually closer to 25%. In other words, 3/4 of the fossil fuel-based sources today completely wasted. That means that a sustainable energy economy only needs around half the current global energy needs due to much less waste. Tesla threw out some targets there, 240 terawatt hours of storage and 30 terawatt hours of renewable power necessary to convert the entire planet to sustainable energy generation, storage and supply. Apparently this will require a $6 trillion investment, but Tesla rounded that up to $10 trillion because why not? And again, just half the energy that we currently use today will be required for this new, fully sustainable energy economy. This also means 0.2% of the land area will be required, e.g. solar plus batteries. All of that stuff, all that infrastructure, 0.2% of the land mass of Earth, which itself is just a fraction of most of the surface covered in water, in case you're unaware. This requires an investment of about 10% of the world's 2022 GDP, or alternatively 1% per year over the next decade. It's a drop in the water. And Elon underscoring, there are zero insurmountable resource challenges here. A lot of people have this perception in their mind that it's not going to be possible, we don't have enough materials, we don't have enough this, blah, 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 blah. They're wrong. And an important note, something that many people are unaware of, the electrified economy will require less mining than the current global economy does. How to eliminate fossil fuels. 35% of this can be done by renewably powering the existing grid, 21% by switching the world's fleet of vehicles to electric, 22%. Now note, by the way, ladies and gentlemen, remember Tesla's mission? Currently making vehicles. That accounts for 21%. 22% from switching to heat pumps. Spoiler alert, Tesla HVAC system coming soon. 17% high temperature heat delivery and hydrogen. And 5% sustainable fuel planes and boats. Again, pay attention here. Most people think of Tesla as a car maker, right? Notice, vehicles accounting for the second largest, not the largest. And spoiler alert, renewably powering the existing grid, switching to EVs, and switching the world to heat pumps are all going to be major parts of Tesla's future mission. You can count on it. I'm going to skip through a little bit. These numbers get super nerdy. If you guys want to pause, I encourage it. They're ridiculous, but just a few quick highlights here. Of this $10 trillion investment, about $7 trillion in terms of manufacturing investment for switching the world to EVs. And this includes the necessary batteries and stationary storage to charge those electric vehicles. A direct quote from Elon here, at least if I got it right. At some point, we might make a heat pump for a home, as in we are going to. It's just we're kind of busy right now. Some more numbers in terms of what's required to electrify high temperature heat delivery and hydrogen, and some more numbers regarding sustainable planes and boats. This will require 30 terawatt hours of solar plus wind, 240 terawatt hours of vehicles plus stationary batteries, and around $10 trillion in manufacturing capital expenditure. Tesla's goal, 20 million vehicles a year, as soon as they can. And Tesla addressed this before it was brought up, because there'll be a few people with their panties in a twist. Oh my god, you can't cover all the land in solar and batteries, you dicks. Currently, around 12.5% of the land mass on Earth is used for farming. 0.2% is required for the solar and battery storage necessary to convert the entire global economy. It's a drop in the bucket. Also, in order for this transition to happen, the resource, at most, we would need to use around 30% of the world's nickel reserves, and way less for every other material. A lot of people, we don't have enough materials, we don't have enough metals, we don't have enough nickel, it doesn't make sense. Wrong. This whole process will still leave at least 2/3 of the world's current nickel reserves intact. As we know, the more we look and explore for new resources and materials, more reserves we find. The main message of today, hope and optimism. And that optimism is based on actual physics and real calculations, not wishful thinking. Earth will transition to a sustainable energy economy and will do so in our lifetimes. And spoiler alert, Tesla's going to have a huge hand in this, obviously. Some comments from Lars and Franz. By the way, a lot of people are getting butthurt. Why didn't you unveil the next gen vehicle, bro? They did. They talked about it. They talked about the numbers. They talked about the cost savings. People getting mad they didn't see the design. But guys, please think. Cybertruck was designed around materials and manufacturing first, which is the first vehicle in which this is true. Previously, they designed the vehicle first, then they figure out how to manufacture. This time, Cybertruck was designed with the end in mind. What materials will we use? Okay, how will we manufacture that? Okay, now what's it going to look like? The traditional way to assemble a vehicle, you stamp parts, you work on the body, you do the paint, and then you do final assembly, which is super dumb, but that's how it's been done for the last century. Hilariously, by the way, Tesla pointing out that Toyota, having just torn down a Tesla Model Y, called the dumb way, as in how Tesla's currently putting together vehicles, a work of art, and Tesla says it's not good enough. Another step change in cost is needed. The new way, which was shown in the presentation, sees a 44% operator density improvement. In other words, much less physical space and movement within the factory, and 30% space-time efficiency improvement. And again, improvements in efficiency mean costs come down and the rate that Tesla can actually produce products improves. So faster scaling, cheaper costs, which they can pass on to consumers. It's a win-win. Now check this out. The next gen vehicle has a 40% reduction or more in manufacturing footprint and a 50% reduction in cost, okay? This is one of the mic drop moments of the entire presentation. Half the cost, and you need a factory about half the size to produce these vehicles that cost about half as much. We heard a few comments from Colin over at Powertrain. By the way, some incredible numbers here. I know it's a bit nerdy, but again, every time you see a reduction in cost or an improvement in efficiency, just think money. Savings that Tesla can pass on to consumers and or additional profit that Tesla can use to fuel their growth and further driving of costs down. Incredible feedback loop. Tesla's current powertrains are about 25 to 30% more efficient than the so-called competition. Some notes on the Model 3's improvement from 2017 to today. The drive unit has become 20% lighter, requires 25% less rare earth materials, has a 75% smaller powertrain factory, and the powertrain factory is 65% cheaper. The next gen drive unit, based on the massively improved Model 3, a 75% reduction in silicon carbide, 50% reduction in factory footprint, and about $1,000 all in cost for the next gen drive unit. Insane. Tesla pointing out the obvious. More cars from a smaller factory equals scaling faster. And one of the most stunning, in fact, probably the most stunning and important things in the entire presentation, that is no joke, the next gen drive unit does not use any rare earth materials at all. I do not know how the fuck Tesla has done this. Like, no idea. Nerds, please let me know in the comments below. But this is really important. Expect some more discussion on this soon. So comments from Pete and David here, discussing the improvements from Model S to 3, the first gen to the second gen. Tesla improved their low voltage architecture to the point where they reduced 17 kilograms of weight from the vehicle. Regarding Tesla's next gen vehicle, the goal, 100% Tesla designed controllers versus 61%, which is what's in today's Model Y, and about 85% Tesla designed controllers in the Cybertruck. Talk about vertical integration. We also learned that all future Tesla vehicles will use 48 volt architecture, an improvement from 12 volt. And Elon replied to a tweet of mine during the presentation, mentioning that this will result in a 4 times reduction in the amount of copper necessary. It saves money and weight. Tesla pointing out some more fairly obvious things that are super embarrassing for the traditional automotive industry. Tesla's been doing over-the-air updates since 2012, and having sophisticated data gathering means Tesla gains key insights that no one else is able to gain. One of their many advantages. We saw more in terms of Tesla's insane crash safety based on real-world crash data, not just gaming safety tests. Most car manufacturers know exactly the different collisions, the different impacts, how it's going to be safety tested, and often engineer their vehicles to game these tests. Tesla instead engineers their vehicles based on the real-world collision data. Where are impacts happening? How can we make sure the vehicle's safe based on those? This is stuff you won't even see in a safety test, but it means Tesla vehicles are so much more safe than anything else out in the marketplace because they're gathering this data and engineering their vehicles based on the real world, not arbitrary safety tests. Regarding Tesla's stunning data advantage, every single day, 123 million miles are driven in a Tesla vehicle. There's also 1.9 million charging sessions every single day. Because Tesla has fleet use data, they understand how long are the average trips, how often are people charging, blah, blah, blah. They've used this data to inform their next generation vehicle battery size, which I expect is going to be a lot smaller than many people imagine. And a truly insane thing that Tesla's never mentioned before, a massive innovation. Tesla's fleet of vehicles is so intelligent, learns and adapts to the point where now Tesla knows there's a patch of rough road coming up on your particular route. We're going to predictively adjust the air suspension ahead of time before you hit this rough patch of road. I mean, this is next level shit. There are no other automotive manufacturers on Earth even thinking about doing this. This is the kind of stuff that you're not going to see people discussing very often, but it's insane. They have predictive air suspension based on AI that's learning the architecture of the road. Oh, this road's really rough and bumpy. We need to make some adjustments here. The car knows that you're about to go into a section of road that's really rough and bumpy and will adjust your air suspension ahead of time. This is some next level shit. But remember, Tesla's just a car company. Some comments from Ashok regarding full self-driving and autonomy, pointing out the obvious. Autonomy is essential to Tesla's mission due to higher utilization rates. Personally owned vehicles sitting around doing nothing most of the time versus an autonomous robo-taxi being used much more often, meaning it's displacing more internal combustion engine vehicle miles, thus accelerating Tesla's mission. We also saw more about Tesla's insane data flywheel, automatic labeling, data comes in, software gets better, on and on and on and on. Insane feedback loop, again, something a lot of people are just not paying attention to. The data matters a lot. As we know, Tesla can also mine the fleet for data. E.g., they need more examples of a certain particular situation. They can literally just send out a request and pull all of that data. Maybe Tesla needs to find videos of dogs pissing on fire hydrants for some reason, right? They could literally do that in their fleet. I'm sure someone at Tesla is watching this right now. Go do it. See how many results you get. There will be thousands. They will have thousands of pictures of dogs pissing on fire hydrants. Just in their, not that they'll probably need that for something, but you get what I mean, right? Once again, pointing out the obvious. Every time Tesla adds data, the performance improves. We also heard there's around 400,000 customers today with FSD beta. 400,000. Remember, data is how autonomy will be solved. Tesla's fleet is orders of magnitude larger than anyone else attempting to solve autonomy. It's already over. We saw some video of Tesla's humanoid robot, Optimus, which at the last AI day couldn't even walk itself. Like literally couldn't even walk, needed to be supported. It's gone from immobile at AI day to dexterous. We saw it using tools, moving parts. Massive improvement. Elon underscoring the thing that Wall Street just does not want to accept. We're the most advanced in real world AI. It's crazy to me that people are not giving Tesla credit for this. Well, Tesla's just a car company. If you say so. More obvious stuff from Elon here. The same AI that drives the car, which is a robot on wheels, can drive the robot, which is a robot on legs. Elon saying that, quote, I don't think anyone else is even close to solving real world AI. I tend to agree. Let me know in the comments below. Who's in second place? Who? Tell me. Some more comments. Tesla should be able to bring a useful product, as in a humanoid robot, to market at scale much faster than anyone else. Now, why do I feel like this has happened before? They did that with EVs, didn't they? They got there first, much faster than anyone else. Been the better part of a decade and no one's really caught up. Not even close. Same's going to be true of the humanoid robot. And make sure you're sitting down for this. Elon thinking out loud, I think we might exceed a 1-to-1 ratio of bots to humans. Now, excuse me for pointing out the obvious, but sometimes you just got to point out the obvious. If correct, that would mean more than 8 billion humanoid robots. I just want to make sure that you got that. Were you listening? More than 8 billion humanoid robots. So Tesla is going to produce a substantial percentage of those bots. Elon once again emphasizing that the bot is probably the least understood thing done at Tesla, and it will be worth more than all automotive, including the vehicles, autonomy, you name it. In my opinion, Tesla bot dwarfs everything else in Tesla's business, and everything else in Tesla's business is multi-trillion dollar opportunity. The bot is on a whole other level. We also heard from Rebecca of charging, including superchargers and at-home chargers. 9 terawatt hours of charging was provided in 2022. That's insane. Tesla also has 10 years of charging data, which means learning and improvement. Who else has 10 years of charging data? No one. We also saw some slides showing that Tesla is embarrassingly ahead of the industry in terms of their hardware installation costs for charging. This really matters. And Tesla's cost per kilowatt hour in charging sessions is down 40% in the last 2 years. Incredible. Remember, numbers go down, profits go up, costs come down, more consumers can afford, winning. We also heard Tesla's trip planner as the air traffic controller for charging globally. The average time at a supercharger, about 30% lower per session. More improvements. And check this out. A fully electric fleet needs around 9 petawatt hours of charging annually. I wonder who's going to put all that charging infrastructure in there. Is there any companies that is doing some charging stuff? And I can't think of any companies, but if there are any, I think that's a pretty large opportunity just between you and I. We also learned that more than 50% of European superchargers are already open to third-party vehicles. Some are open in Australia, and some have just started opening in the US as well. Overnight, I believe we saw Tesla announcing a $12.99 monthly subscription for third-party users to gain access to the supercharging network or to gain discounted prices. I can't remember the exact details, but again, do the math. Tesla is the company, the charging company globally. Everyone's going to be using their network. Everyone's going to be paying to use their network. And Tesla's going to be printing even more billions of dollars of profits just from the supercharging network. Tiny speck of their overall business. Somebody's got to do it. We also heard from Khan and Roshan regarding supply chain. One of the most important and often overlooked aspects of any business, particularly when you're manufacturing complicated large objects at scale. globally. These guys have been at Tesla for 14 and 10 years respectively. Talk about a long term. We learned that Tesla has some truly insane data and dashboards monitoring supply chain and spotting issues that form before they really manifest, which enables massive agility. Tesla's built software to monitor their global supply chain. They learn about problems before they happen, rather than other companies who learn about problems after they've happened. Shout out to the global chip shortage, in which Tesla continued to scale up production and grow relentlessly, while every other automotive manufacturer on Earth saw volumes decline. Oh, we can't get the chips, we don't know what to do. They just cried in the corner. Tesla saw the issues coming and addressed them ahead of time. A little bit of context, super nerdy, but it's important to understand. In terms of supply chain, the S and X each require 3,500 and 21,000 individual Tier 1 and Tier 2 parts. The improvements between S and X versus 3 and Y, from 3.4, 2.1 thousand parts on Tier 1, and from 21,000 to 19,000 parts for Tier 2. Storage, solar and charging, etc. currently combined approximately 9,000 Tier 1 plus Tier 2 parts. When this is a shitload of stuff. One issue, one part, can't get a single part, can stop everything in its tracks. This is really complicated stuff. It's nerdy, but it matters, and there is no question. Tesla's ability to manage supply chain has to be among the best of any company on planet Earth. Need proof? Again, go back to the chip shortage over the last couple of years. How the f*** did Tesla keep growing their production while everyone else reduced production? The answer is because Tesla's better at managing supply chain. The car computer alone has over 7,000 individual components in it. Just the computer inside the car. We heard some interesting numbers in terms of logistics. I think in the last year alone, 16 million pallets and racks were received. Per week, over 1 billion electronic components are shipped. Tesla currently has 685 global service locations in 45 countries. I mean, this is complicated as f***. It really is incredible how well Tesla's supply chain team is handling things. And pointing out the obvious here, the numbers above in terms of pallets, packs, things, electronics, global service locations, this is going to go up a lot. We also heard about supply chain hell, which funnily enough actually helped Tesla. The pandemic really changed the game. It forced Tesla to be more efficient, more agile, more responsive, and overall, a bit of a blessing in disguise. One of the most unbelievable slides in the entire presentation. As the result of Tesla's heat pump, which replaced the previous thermal management system in their vehicles, there was a 99, not a typo, 99% reduction in labor. 99% reduction in labor. What the fuck? And a few key quotes here. With fewer parts and fewer components, you do more with less. We also learned that Tesla going from 0 to 40,000 cars per week, which is roughly their current scale, was tough. But 40,000 to 400,000 vehicles per week doesn't phase us. No big fucking deal. Been there, done that. This will be easy, bro. They've only got a 10x. We also heard from Tom Zhu of manufacturing, absolute monster. This guy is a beast, highly underrated. At this point, Tesla has 4 factories, 65,000 manufacturing employees, and I believe the total headcount is like 129,000, so just a little over half of all employees working in manufacturing directly. And current capacity, around 2 million annual. However, pointing out the obvious here, capacity will grow as new capacity is eked out of existing locations. Moments after this comment, we learned that the Fremont factory itself just set a new daily record for output, evidence that Tesla continues to find new ways to do more with less and eke out more capacity from existing locations. In case you don't know, Tesla also has an in-house construction team. They have full control over design, engineering, construction, and site management. This is how they construct factories faster than anyone else on Earth. This is the team that builds all new factories. In other words, they go to wherever the factory is being built. This is their responsibility. We also learned Tesla has just built their 4 millionth vehicle. And for the record, check this out. It's called exponential growth. It took 12 years for Tesla to build their first 1 million vehicles. It took 18 months for the second million, 11 months for the third million, and less than 7 months for the fourth million. Could somebody do me a favor and maybe send these numbers to the dimwits on Wall Street who think Tesla's going to do about 6 million vehicles per year in 2030 and go, hey bro, please explain, given this context, what are you smoking and can I have some? Like for real, this is just the beginning. Also some interesting slides showing that Shanghai has significantly reduced labor hours per car versus Fremont. Now for the record, Shanghai was a clean sheet design. Fremont was a factory Tesla bought for a penny on the dollar during the global financial crisis. So they had to make do with the existing layout, which was extremely inefficient. But there's a huge difference between the total labor costs in terms of Shanghai per vehicle versus Fremont. And every factory Tesla produces in the future is a comparable or more efficient layout and design to Shanghai. We also heard some updates from Drew Baglino regarding cell manufacturing. Tesla has now successfully fully automated the dry electrode process. That's electrode, not electric. Autocorrect. Tesla's now 20 times the productivity shown at Battery Investor Day back in 2020. A 20x improvement in productivity. That was 2020, it's now 23, do the math. In short, the simplicity has gone up, the investment cost has gone down, scale has gone up, and Tesla's new battery factories will be 10 times smaller volumetrically. 10 times smaller. Talk about doing more with less. We also heard what I think is a goal, reiterated. Tesla aiming to do 240 terawatt hours in stationary storage and 20 million vehicles per year. Now, I swear I didn't hear this right. That's why I got a question mark. Someone tell me what the I heard, because that doesn't even make sense. But it's in my notes, so I can't skip it. We also heard from Mike in energy. The Megapack XL is the largest possible object that can be transported on roads. In other words, Tesla has literally designed the Megapack XL to be the biggest thing they can make that can still be transported legally on roads without an absolute nightmare of prearranging, getting stuff blocked off, etc. So there's not going to be a Megapack XXL, but you can absolutely bet your bottom dollar we're going to see these things everywhere within a few years. Tesla's energy business has seen a 65% compound annual growth rate since 2015. For the record, when implemented, the energy density of a Megapack XL is around 300 megawatt hours per acre, which is 2 times more energy dense than a coal peaker plant. We also heard some brief info on AutoBidder, which I've discussed in detail in this video in the past. It is literally an automatic money printer. Buys energy low, sells energy high, and makes the owner of the asset, the battery storage that's using the AutoBidder software, money while they sleep. Literally a money printer, an automatic money printer. Now here's the thing. If you already own a battery, Tesla or otherwise, especially commercial use, businesses, etc., Tesla can literally come and knocking on your door and go, hey guys, you've already got this battery. Would you like to start printing money from this battery in your sleep? Yes or no? Oh, you would? Okay, great. Let's talk. We also learned about Tesla Electric rolling out. The first instance of this, Tesla is offering Texan consumers unlimited overnight home charging for $30 a month. $1 a day for unlimited overnight charging. Imagine you're an Uber driver and you're in Texas. You can charge your Uber for $30 a month. We also hear there's 100 gigawatt hours per year of Megapack demand in 2023, and it's going to grow massively over time. And wrapping things up, Zach Kirkhorn talking numbers. Tesla has managed to take out 30% of the cost of producing a Model 3 from 2018 to 2022. But in that time, the product itself has become much better. But if you thought that was crazy, the next gen platform is going to be a 50% cost reduction from this already much cheaper Model 3 platform. Half price. One more time. Half price. One more time. Tesla's next gen vehicle is going to cost half as much to produce as today's Model 3. One more time. Half as much. Don't want to labor the point, but half as much. What happens to sales, vehicles? What happens when it's half the price? Words matter, and we also learned that the robotaxi variants of this new vehicle platform, meaning there's going to be robotaxi variants and consumer variants, will have substantially lower cost per mile, obviously. One of the big swinging dick moments in the presentation was Tesla's operating expenditure declines. These are the OPEX as a percent of revenue numbers over time. In 2018, 17.7%. 2019, 13.7%. 2020, 10.1%. 2021, 9.4%. 2022, 7.5%. This is one of those things where the Tesla Q dolts, their brain literally just breaks and they go, it must be accounting fraud. It's literally not possible. How is it possible? Their operating expenditures are declining. How is it fraud? Or maybe Tesla's just extremely resourceful and efficient. Some more very impressive numbers. Tesla has a 60 to 70% lower SG&A expense per vehicle sold versus legacy automotive. Not 6 to 7%, 60 to 70%. We also learned a lot of the internal processes at Tesla, stuff that you don't see as a consumer, their own software, everything like that. They've seen 4 to 7 times efficiency improvements in their internal processes in the last few years. It all counts. Everywhere they can save time, money, become more efficient, it all matters. And one of the things that really blew my mind was a slide describing Tesla's current total investment to date. In the history of the company, they spent $28 billion total. Tesla estimates in order to achieve their goals, 20 million vehicles per year and the other related scale, they're only going to need to invest an additional $150 to $175 billion, about 6 times more than they've invested in the lifetime of the company to date. Now, this really matters. I just want to point something out. Tesla today, per quarter, is generating give or take about $4 billion. Even at today's profitability, it's going to keep going up, but even if it didn't, it would literally take less than 2 years for Tesla to generate in profits the entire amount of capital the company required to reach today's scale. Remember that next time you hear a legacy automotive manufacturer telling you how many quadrillions of dollars they're investing to produce their next 69,000 different EV models by 2025. It's going to be a lot more than Tesla's invested life to date. A lot more. Another great quote here. We have never once pulled back on our investments in growth, okay? Remember I keep saying Tesla's going to sell every vehicle they make. They're going to keep scaling up. They're not going to slow down. Meanwhile, everyone's like, oh my God, that's demand issues. Oh my God, I'm selling Tesla stock. Demand's collapsing. Oh my God, look, haven't you seen the data out of China? Steve it. Just remember this every time you hear a dipshit claim that there's issues, there's demand, blah, 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 okay? Tesla is scaling as fast as they possibly can. And they have been through the entire history of the company. Not once have they slowed down their growth or expansion. Not once. Yet still today, people question demand. They question everything. Meanwhile, I question their cognitive faculties. I mean, bro, this actually really matters. Words matter a lot. This is an important fact. They're scaling as fast as they can. They're growing as fast as they can. And this has been the case from day one. But please, tell me why Tesla's not going to get close to 20 million vehicles sold per year. I was talking to you, Wall Street analysts. I think Tesla's philosophy as a business in a nutshell, quote, we use innovation at an intense level to drive costs down and to improve the efficiency of the business, which is necessary for product affordability. More efficient business, cheaper products, more people can afford them, win. There was a truly mind-blowing amount of data provided in today's presentation. Lots of insights into the future, if only you'll do the necessary thinking. The implications are profound. The roadmap is clear, yet my suspicion is that most investors either won't understand or won't bother trying to understand and will dismiss most of what they've heard. This would be a colossal error of judgment. Tesla has just laid out plans and told us how much it's going to cost. Play along at home, ladies and gentlemen. If Tesla's next-gen vehicle platform cost them about half as much per vehicle as today's vehicles, here's your homework. Look at the average new vehicle price in any country on earth. Then figure out what Tesla's new vehicle will be when it's half the price of today's Model 3. Then try to determine how many people on earth could afford to buy one of these vehicles. Then, after cleaning up the mess, determine how many vehicles per year Tesla might potentially be selling in the future, what the average selling price will be, and then you can explain to me why they're actually sandbagging when they say just 20 million vehicles per year by 2030. I know this is pretty nerdy and down in the weeds stuff, but ladies and gentlemen, this really matters. Every single number disclosed in today's presentation was a fact or a very close approximation of a future inevitability. This can give us as investors the ability to see into the future and see things that others miss. If you haven't already watched the full presentation, I recommend it. And then when you've done that, watch it again and again and again. I have a feeling that 99.9% of what we saw today will go over the heads of Wall Street analysts, the finance media, most in the general public, and even a lot of Tesla retail investors. That would be a mistake. What we saw in today's presentation from Tesla, in essence, is a clear path, clear plans, clear numbers demonstrating how Tesla will scale to ridiculous size and as a result, grow into a valuation of many trillions of dollars in market cap. When? I can't tell you exactly, but it's going to happen. Don't say I didn't warn you. And speaking of warnings, here's another one. I highly encourage you, in fact, I implore you, at least if you want to feel and perform your best, start taking Athletic Greens AG1 every day. I've been doing so now for the better part of 2 years, and I've never felt better. AG1 is an excellent way to fill in nutritional gaps. It's full of 75 high-quality vitamins, minerals, and nutrients. It has digestive enzymes, keep you regular as clockwork, prebiotics, probiotics, and adaptogens. It helps boost mood, energy, immunity, and recovery. And I do speak from personal experience. And if you use a link in the pinned comment or head to athleticgreens.com/SMR, you get a 1-year free supply of vitamin D3 and K2. Plus, there's a 90-day money-back guarantee. Every day I see new comments and receive new DMs from people who've started taking Athletic Greens AG1 and they feel amazing. So, no excuses. Head to athleticgreens.com/SMR and start your daily health habit now. Then, in a few weeks, let me know how you're feeling. And don't forget, we've now surpassed 300 exclusive videos over on Patreon and continuing to count. So if you're not a member, you can join with the card in the corner or the link at the pinned comment, and I'll see you over there. Love ya.